Welcome to the Commercial Property Podcast. My name is Susie Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.susiecarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. So let's talk about niching your commercial property strategies. And I'm going to start with, why would you want to niche your commercial strategies? So let's think about what commercial property is. It is a massive sector. It's a huge generalization to talk about commercial because actually it basically covers every type of property occupied by businesses. So if you think about it in that context, and you think about how many different businesses there are in the UK, then you can actually see exactly how many different types of commercial property there are. And of course, as I said on last week's podcast about sectors, we like to simplify things because it's so complex. We like to simplify things. So we like to talk about retail, office, industrial, healthcare, leisure, hotels, pubs, purpose-built student accommodation, build to rent or PRS, and or multifamily as it's called in the States. So we like to group it because it's difficult. There's so much complexity in it. But if you break down each sector, and I'm kind of slightly recapping what we talked about last week, if you break down each sector, then you can see that within retail, for example, you've got high street shops, you've got MSUs or medium-sized shop units, you've got department stores, you've got food stores, both convenience and out of town. You've got out of town retail, you've got roadside retail, you've got shopping centres, and I could go on. And of course, then if you move on to all of Class E, you've got restaurants and you've got cafes and you've got childcare or whatever else it might be. So within every single sector, there are loads of different types of property. And the same goes for every single type. So in offices, you've got business parks, you've got in town, you've got out of town, you've got small offices, you've got large offices, you've got grade A offices, you've got kind of secondary offices. In industrial, we have flex space, which is the nice space that you can subdivide and lots of SMEs and different types of businesses want to go to. But you also have massive things like chemical works. You've got life sciences, you've got data centers, you've got gigafactories. So you can see that there's a lot of complexity in commercial. So that's the bad news. But the good news is that within each of those sectors, within each type of commercial property, there are basically winners and losers. And there's opportunities at every level of every property. So, for example, if you found a secondary office, so if you want to use it as an office and you want to let it out as a whole, or you want to let it out floor by floor, then you're definitely barking up the wrong tree, because there just isn't the market for that in a lot of places. Now, obviously, there's always exceptions to every rule. So we like to generalize, but then we kind of break those rules. But as a general rule, a lot of blue chip companies, a lot of the companies that maybe their lease has expired on their old office, they want to move to better offices because they can get it for a similar price, probably for better environmental credentials, EPCs, renewables, better specification, etc., etc., etc. And of course, there's the level of flexibility needed by kind of people wanting to work from home, flexible working, being in the office 3 to 4 days a week, or whatever the kind of working patterns are. So making office hubs, there's loads of complexity behind that. So what we try and do as investors, we try and simplify things because obviously simplicity is the key to success. And if we simplify things, then obviously we need to be careful that we're not oversimplistic. But if we can actually niche our strategies and actually kind of hone down in a couple of areas of property where we know we can make great returns, then obviously we can absolutely simplify the complexity. Now, the good news about the complexity in the commercial property market is that it puts people off, but there's no need for that. There's definitely less competition, especially in smaller lot sizes, because a lot of people are concentrating on residential investing because they think that commercial is too complex. Well, wrong. If you've got the information on commercial, you can make some really great decisions and you can find an investing niche that really suits you. So we need to make sure that we simplify the complexity. We find these niches or sub niches, or as I like to call them, micro niches within commercial property. And we can do that because there are so many different types of businesses, so many different types of locations. And that basically the name of the game is trying to find those locations where you can find higher than average returns, where the masses just aren't investing. And then you can be totally laser focused in that as a strategy. I wouldn't recommend you have more than 2 to 3 niches tops, so that you can really concentrate on them. Because you're laser focused, you understand that market. It means that you can, when you're stacking deals, you know the rents, you know the yields, you know the key players in the market. You probably understand the tenant demand as well. You know the sweet spot of space in that market. So there's lots of different reasons why you may want to niche, and I would highly, highly recommend it. So let's take a step back and think about how we niche our strategies. So first of all, we need to play to our strengths. So when I sit in my boardroom and I have maybe 12 people around the table, and we're talking about investing niches, that's one of the first sessions we do on the board, because it's so important to start with the end in mind. The board is highly strategic. So we look at starting with the end in mind. We look at where you want to get to, and we also look to play to your strengths, what you enjoy, and then we kind of work backwards towards your niche. So when we start with the end in mind, when we talk about what people enjoy or what they're good at, I think that's the two main factors: what you enjoy and what you're good at. Now, obviously, there's that, and then there's the kind of opportunities in the market. So there's internal and there's external factors. So let's look at the internal to begin with. So sometimes it does take people a little while to find their niche. They're new to commercial and they're trying to get their head around it. Obviously, I hold people's hand if they're on the board with me to help find their niche. And what I always say is, what do you know? What do you enjoy? What are you good at? So I'll give you a couple of examples of that. So quite often people say, well, I'm thinking about this or thinking about that. One board meeting, I had a very, very clear answer on a niche. I'm an accountant. I am going to buy accountancy firms which have commercial offices. I'm going to consolidate the space that everybody's working in, and I'm going to asset manage the commercial from that accountancy company. Really clear, absolutely plays to strengths. I had another client, a little bit uncertain about their investing niche. And then when they were asked kind of what they enjoy, they said, well, I love martial arts. And actually, my martial arts instructor is looking to roll out a load of martial arts studios across the South Coast. And, I can talk to him about maybe kind of doing 2 or 3 with him. So again, really found their niche quite quickly. So I would definitely, there's that internal factor. Think carefully about what you're looking for, but also other factors like what kind of returns are you looking for? What are your targets? Do you want to be hands off or hands off on with your investing? Obviously, if you invest in something like serviced offices and you want to manage them yourself, then that's not going to be hands off. But if you want a full repairing and insuring lease, then that will help you narrow down your niche, because actually you're looking for properties, you're looking for investing locations where you can get a full repairing insuring lease. So that's super important. So that's number 1 is internal factors, and number 2 is external factors. So within the external factors, what we're looking for is those investing locations where we can get great returns. Now, contrarian investing is a really great way of starting with this. So for example, all the headlines which basically say that all retail is dead. And I know for a fact that there are certain investing locations, because I invest in them, where supply and demand is definitely imbalance of demand, which means that I can get long leases at good rents to good local operators, not brands actually, but good local operators with personal guarantees, and that we can work together on that. I can get full repairing, insuring leases. Now, if you were listening to the headlines, if you see the headlines of some of the tabloids, you would think that that would never be achievable. And of course, there are some locations, some shopping centres, some high street locations where that just isn't possible. You're looking potentially, because there's so many empty shops, you're potentially looking at getting rolling breaks for tenants and low rents and tenant friendly leases. That isn't the kind of investing space we want to invest in. We want to invest in locations where we know that we can kind of buck those trends. So that's an example. And then another example is we obviously want to try and create some value. So there's a couple of ways of investing in commercial. One is that you buy for yield and you just kind of hold the asset. Obviously, in times like this, where it's difficult to see market growth at the moment, that's got an element of risk associated with it. What you really want to be looking for at the moment is value add opportunities where you can force through the value. And that's through asset management. So it might be that you find a niche where there's a certain type of demand, but it's just not being catered for. Maybe it's a certain size of demand or configuration or whatever it might be of property. And therefore, what you can do is you can try and create that. So a great example of that is finding a larger industrial unit and maybe carving it up. First of all, commercial finance really likes that. But second, you can carve up the space, and it will potentially hit the sweet spot for your market. Obviously, you need to do your market research first to investigate that. And then you can let it out at higher rents. I've got clients doing this all the time. They're almost doubling the rents. So they're basically buying a property at one rent and they're carving it up and they're actually doubling the rents as a result of subdivision. And, that's a great niche to be in. So it's really important to be laser focused, hear the noise outside these investing sectors, but really do your own research. So how do you kind of narrow down your niche outside of the internal and external factors? Well, I'm going to share the link to my micro niching webinar below. And whilst that's a little bit out of date now, it gives you some really nice fundamentals of how you can find a niche. So the different ways you can find a niche are through looking at the trends in that particular investing location, the strategies, and the finance. So, and you can start anywhere. I draw it as a Venn diagram, but you can start anywhere around that Venn diagram. For those of you who can remember that at school, remember that the sweet spot in the middle is where everything interacts. And obviously that's where the micro niching sweet spot is. So an example of that might be that I quite often roll this example out, which is I live near Gloucester and not far from Cheltenham. So GCHQ is based in Cheltenham, and they've got, a lot of people employed in the listening service there, the government security service there. And because it's very tech based, there's a big tech industry that's grown up around it. And a lot of the offices locally, a lot of the education institutions, they have a real tech focus. And actually, there's purpose-built offices, there's repurposed offices being built or being kind of created purely for tech businesses. And so that's where a lot of the tenant demand is coming from. So if you go around our Venn diagram, we start with trends. Well, obviously, unfortunately, the world's getting a bit more of a scary place these days. So there's never not going to be demand for that tech listing service. I actually don't know how wedded GCHQ are to Cheltenham. So obviously that's something that would need to be investigated. But I do know that Cheltenham Council are putting a lot of money into keeping them in the area and building around that tech business. So they're actually purposing some of their land for kind of bringing tech businesses in. So the trends, you're ticking the box for the trends. Location, obviously, that's very location specific. So then you need to work out exactly where the sweet spot is for those businesses to be located. How far from GCHQ do they want to be? What kind of businesses are they? What kind of floor space do they want to occupy? What kind of rents will they pay? And then you look at strategies. So, for example, could you buy a secondary office and subdivide that? So lots of tech businesses could be there. Could you buy land and build an office, a grade A office for some tech businesses? And that's happened in Gloucester, opposite the station. They've built a specific tech-oriented office. Could you look at existing tech businesses where maybe they're coming to lease expiry and see if you can extend the leases to add value? Maybe look at rental trends and rental trends increasing, and then you look at finance. So how are you going to finance this? Well, if it's multi-let, for example, then the finance companies will really like that. If it's great blue chip type tenants on longer leases, they will also like that as well. So before you know it, you've actually got a really nice niching strategy. So I'm not suggesting you all pile into tech offices in Cheltenham. So what you do when you think about a niche like that is you then do some research. So you'll look at office properties to let, you'll look at occupants. You can do a lot of this research on things like CoStar or Searchland or Nimbus, some of these tech packages. You can do lots of desktop research. Then you can go and talk to commercial agents and you can kind of find out what the demand is, whether it's been satisfied, whether there's a shortage of a certain type of office property that they're looking for, whether they want kind of workshop space, or whether they want do they want shop fronts or whatever, and then you'll be looking at the type of leases they'll take, the rents they'll pay, and, what's the lease length, where are the opportunities lie, and, how can you satisfy that? So you'll be doing a load of research based on that. And then, if you obviously go through checks and balances at each stage of the process, and, you might rule niches out at some point because you will be thinking that actually maybe it doesn't stack up for your particular targets. And of course, we always start with the end in mind. We always want to make sure that we are looking at kind of what we want to achieve. There's no point investing in a niche that doesn't tick those boxes. So if you want hands-off income, there's no point kind of diving into something that's really hands-on. But yeah, so you'll just want to be kind of doing your checks and balances at each stage to refine your niche until you're ready to kind of dive in and find the opportunities.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
The other great thing about niching is that you will build relationships up in your particular niche, and you will get early opportunities on properties that are coming up. So if you really kind of invest in a niche, agents, they know that you're the expert in that particular niche. They know that you're credible. And obviously that's a really important part of building relationships with key stakeholders. Then they will offer you the stock off market. That happens a lot with commercial. They will offer you deals, especially if you've already bought one. They'll know that you follow through. They will help you with letting, and you will understand it yourself. So when you're stacking a deal, you won't have to go through that process of going, oh, right, okay, so what's the tenant demand? What kind of lease length can I get? What kind of rent can I get? Oh, kind of, what's the ideal size for these tenants? You will know most of that information already because you understand your investing niche. And it's incredible, like this reticular activating system in our brain, the one that, if you buy a red car, will only see red cars around you. It's uncanny how you're like, wow, I never realized there were so many red cars around. That's because you have this reticular activating system in your brain that recognizes familiarity. So this happens with niching. Once you start getting your eye into this, and I kind of, you're going to have to take my word for this if you haven't done it before, you will really start to understand the opportunities. I mean, I will literally drive around with my family at the weekend and I will be spotting niches right, left and centre. I will go to a lovely little town or a village for Sunday lunch, and I'll be eyeing up the retail thinking, oh, no voids here. I'm sure this could be an interesting location. So unfortunately, it's one of those things that you can't unsee, which is a good thing if you're looking for niches, because, you will stumble upon niches all the time. And so the important thing is just to start, like genuinely. Some always when you're looking at kind of new niches, new opportunities, new markets, it feels overwhelming, but you just need to start. So definitely listen to the micro niching webinar. As I say, a little bit out of date, but the information is still very much there. And I help my board clients with niching all the time. By the end of the board, well before the end of the board, they know what their niche is. They're really being laser focused into it. And that is the beauty of niching, is that you can be absolutely laser focused in what you're looking for. And especially if you can find these amazing opportunities that the masses just don't know about, then obviously you can get much higher returns, and that's the name of the game. So niching is the only game in town in commercial. I'd highly recommend it. And, you will definitely get the benefit from not being scattergun and actually niching your investments.